What a crazy week we had last week. We had RFK back out of most states and stop his campaign to join Trump as a unity party. And on Friday, Jerome Powell at Jackson Hole announced that most likely it's time for policy changes. September, October, November is going to be some of the biggest changes we've ever seen, and everything is going to shift from November 2024 to 2030. You're going to see the biggest changes in your financial system, geopolitical, and how we do business. Get ready. Jerome Powell said he's worried about the middle class getting wiped out, leverage source technology moving down to the working poor. This is the greatest paraphrasing. This is the greatest time in human history to build wealth for your family. So we're going to dive into that. We're going to talk about the Japanese stock market. We're going to talk about how Jerome Powell is getting ready to lower rates and how that's going to affect your investments. So let's dive right in. So on August 5th, we saw the Japanese stock market come collapsing down, which caused a panic globally in the market. So we saw a huge pullback in cryptocurrency, the stock market, the Japanese stock market. And so we're starting to see the cracks in the system. Created an awesome buying opportunity. So those who understand the game didn't panic, didn't trip, and bought the dip. Okay. Then we are heading into some other reports here where if you look at America's household debt, okay, it is getting out of control. So the American credit card balances have hit $1.1 trillion. $1.1 trillion. Think about that for just a moment. That's massive, guys. That's the American credit cards. And this is what the household debt looks like. So think about this. Every single dollar in the system is someone else's debt. So if we can't service our debt, and that's where our income comes from, we monetize debt, where's the money going to come from? Well, they turn the printing machine back on, and that's exactly what's going to happen. And I'm going to explain the model that I think they're pushing us into, okay, as we continue to go through. And if we look at here, the money supply, so this is what you want to look at here in 2020. I mean, look at this. This is from 1971. Look how much money they printed, guys. This is when they detached from the gold standard. It just goes climbing up, climbing up. Boom. You look at 2008, the financial collapse right here. This is these are the dips right here, the financial collapses. You see the gray. This is where we had the big pullbacks. Okay, you see 2008, boom, they turned the printing machine on, and it's been on full blast since 2008. Now, if you've ever followed the fourth turning, we're now in the crisis stage, right? It started in 2008, and it's almost like they said, hey, listen, we're in the crisis stage. We got a brand new economy coming in. And usually after a world war, you have a change in economic power. You have a change in economies. You have a change in the economic system. And it seems like they just said, screw it. Let's just turn the printing machine on full blast. They knew there's nothing backing the currency, guys. And since 1971 or 1913 specifically, the dollar's collapsed 97 to 98%. Now look at this. So it went up 2020. They just turned it on full blast. Okay. Then it started to peak a little bit, and they turned the printing machine off in 2023, and it started to come down, but now we're starting to ease back up. So a lot of people don't realize, but they're starting to QE again. So they're starting quantitative easing. Okay. The stock markets collapsed in the beginning of August. We saw recovery on Friday because of this right here. Okay, so we're going to listen to this, and on the back end, I'm going to share with you what I think is going to happen as we go into September, October, November.
A major announcement on the economy that had an instant impact on the stock market. During a speech in Wyoming Friday, Federal Reserve Chairman Jerome Powell said that the time has come to cut interest rates. That's all as Wall Street needed to hear. His comments sending the markets surging. NBC News senior business correspondent Christine Romans is here to break it all down for what this means for your money. Christine, good morning.
Good morning.
Okay, why now? Why is now the time for these cuts?
And the Fed chief said the time has come, and that's because they're now more worried about weakening the labor market than inflation coming back. So kind of saying that inflation is not the problem anymore. We want to make sure those high interest rates aren't going to damage the overall economy. Remember, the Fed chief is trying to orchestrate something called a soft landing. He's trying to kill inflation, but not hurt the overall economy. And the reaction from Wall Street is that they seem to be thinking, he might actually get this done. He might be able to get rid of inflation and still have an overall solid economy.
So let's put this in kitchen table terms for a moment here. This is what folks want to know, how it's going to impact their bottom line. You got mortgages, credit card debt, car loans. What does it do on all of those things?
It means that lower interest rates are coming. It means the Federal Reserve will start cutting interest rates probably in September. We don't know by how much and how fast, but I expect you're going to be on a rate cutting cycle here which means for anybody who's borrowing money, companies and households, that borrowed money is going to be cheaper to finance. It means a car loan, a new car loan or a lease will be a little bit less interest. It means a home loan could be a lot less interest. We've already seen mortgage rates drift down to about 6.4, 6.5%. I expect that'll continue to happen into the end of the year. Credit card debt, still a problem though, America. We cannot be putting a lot of credit card debt on there and not paying those balances because those interest rates are above 20%. I expect those will come down very gradually, if at all. So
okay. So they're going to aggressively, I think, start lowering rates because like inflation is cooling. Okay. But now the job markets are in a dangerous position, guys. This is something I've been trying to talk about. We're in a post-pandemic economy now. So Jerome Powell is trying to balance this. People are losing their jobs now. So many companies have been to the tipping point. Bankruptcies are through the roof. Companies are shutting down their doors, right? Companies are bringing in innovative technologies, AI. So here's the good news is that if interest rates come down, it's going to stimulate the economy. When they turn the printing machine back on, okay, it's going to create quantitative easing. It's going to create a reduction in the value of the dollar. And this is the whole thing right here. So Bitcoin rises after Jerome Powell lays groundwork for interest rate cuts, okay? So remember, when the dollar goes down, it makes these assets look more valuable. Remember, Bitcoin's a risk on, risk off asset. Bitcoin drives the market. Okay. When the dollar goes down or interest rates go down, that means the dollar's less attractive. So it's going to push the markets up. Okay. Right here, this is what Forbes put out. New oil and gold. Crypto is suddenly braced for its most important week after the Federal Reserve powered Bitcoin price. The Bitcoin price had surged over 64,000, climbing sharply from the lows of 50,000 as the U.S. dollar collapse fears suddenly emerge again. Now, as Donald Trump's son plots a radical plan to shake up the banking world of finances, and widely respected analysts has predicted this week could be one of the most important in years of tech stocks and closely correlated Bitcoin market. Okay, so this is what I wanted to show you right here, the Warren Buffett indicator. Okay, so now here's my narrative around this. Let me bring myself back on this screen. Okay, so this is the Warren Buffett indicator. So it still shows that the stock markets or the markets are extremely overvalued by 202%. Why is that? It's because quantitative easing. It's a fake economy, guys. Like there's been so much money pumped in the economy. A lot of companies are still alive that shouldn't be alive. Okay. When you can borrow your way out of the problems, and if they lower interest rates, people will be able to borrow their way out of their problems again. The problem is there's no real money in the system, right? So that's why the narrative has switched so quickly in 2023 to 2024 from Bitcoin being a pet rock used for money laundering, used for drug fentanyl use and all that stuff, to now a flight to quality and a flight to safety. And that's why now it's part of the presidential campaign. That's why now they want to pull under the Federal Reserve, because this is the fix. If they're going to turn the printing machine on and lower interest rate again, that's only going to weaken the dollar once again. Now, the good news is if you're in cryptocurrency, specifically Bitcoin and alternative coins, well, specifically Bitcoin, because it's going to drive the market. Now I'm in a lot of altcoins, but the reason why I bring up Bitcoin, because it is the narrative right now, right? So when they lower interest rates in September, people are going to run to a flight to quality. The big money is going to run into Bitcoin. Okay, that's going to create a parabolic move, probably a little bit of a move in September. And then organically in November, it's going to go up in the bull run. And we have the presidential election as well, where markets are usually favorable, right? Here's what I think is going to happen. Because of these overvalued stock markets, this way, my camera's backwards, because of the overvalued stock market, is we're going to go into an economy that's basically kind of like a false economy, right? The way we have to grow, the way we have to get out of this is to grow out of this. We need to bring the public and private sector together and new infrastructure. So what I'm going to be really focused on is right now it's crypto for me, okay, which is speculative. It's going to give us a large amount of money in a short amount of time within the next 24 months, probably next about 24 months going into 2026. That'd be about 18, 19 months. Okay. What I'm doing is I'm pulling profits, guys. I'm getting money off the table because of this. The stock market is overvalued. Everything's going to overheat, in my opinion, right? Then there's going to need to be a massive pullback. And we still got 2026, 2027, 2028, 2029, 2030, where I've been saying for years that the banks are going to transition into cryptocurrency. So we'll see another bear market, and that's where we can accumulate once again. So in 2025, I'm pulling a 50% of my profit off the table. Bitcoin, I'm not touching. I'm pulling 50% of all my alternative coins profit off the table. I'm bringing it down into tier one capital. I'm insuring my wealth, because think about it, on this side, I have an asset that appreciates. I pull it down and I'm holding Bitcoin long term. So it's an appreciating asset that I believe is going to be here for my lifetime. I'm pulling profits from all my alternative coins, and I'm ensuring my wealth. I'm keeping my money my big money out of the banks as much as possible. I'm banking on myself. I'm putting my money, ensuring my wealth, make sure my family's insured. I make sure that my money is insured. And I'm using cryptocurrency as speculative asset. And as we transition into the new wave of energy, we're going to be investing in things like AI technology. We're going to watch the waves of energy, like what is happening next, right? There's going to be a lot of innovation coming, a shitload of innovation coming. Our world is radically transforming. So basically what I do is I pull from the left side of the risk pyramid. I pull profits from high risk, high return. I bring it down to tier 1 capital. Some people use bonds. Some people see bank accounts as safe and effective. I don't hold a bunch of money in my bank. I'd rather have it in my insurance policies. And then we're going to be continuing to grow in business. Like I said, we're going into real estate, and I use silver as my precious metal and Bitcoin as my gold. Simple strategy I use, diversified across different platforms. Crypto is not your retirement. Do not mix your investments with your retirement. Cryptocurrency is a volatile asset. It does not have regulation yet that can get a really large amount of pump during the bull market, but it's never profit or gains until you pull profit, right? We saw thousands of people go up and come collapsing down. That's going to happen again in 2026. Who knows? It could be happening in 2025. That's why you just set exit targets. You don't try to time the market. You have a plan in the market, right? When it dips, we buy. When it goes up, we sell at targets on the way up. And if it doesn't hit the target, we don't sell. Or it doesn't matter when the bull run is. It just matters when it hits a target, right? So it's get out of the emotional state of mind. But yeah, that's all I got for you guys. I love you guys. I appreciate you. Thank you so much for following the channel. Make sure you like, subscribe, and comment. And if you need any support at all, if you Jeez, come on, JB. If you click the description of this video down below, fill out a needs assessment, get thousands of messages per week on how I ensure my wealth. If you fill out the needs assessment, it's about you and what you need. My team members will reach out to you and we can talk to you about retirement strategies. So it's completely free consultation. Be careful of scammers. I'll never proactively DM you. I'll never ask about your crypto portfolio. We do not have an investment platform. Okay. The needs assessment is completely free consultation. My team will call you, text you, and email you, and it's completely free, the consultation. So I love you guys. I appreciate you. As we always say, warriors, rise, get your shit together. Let's go. I'll see you on the inside.